Buffett also says that we love bad news as long as it is temporary, because that gives us an opportunity to invest.
Sure.
If I look at a classic compounder in India, that has been HDFC Bank. It never gave bad news. And for those who've waited for bad news, they've never got one.
Sure.
But for those who've not bought HDFC Bank, they've also regretted it. So how does one identify a classic compounder like Asian Paints or a HUL or a HDFC Bank? Because they don't give bad news.
Yeah, so I think it's in the nature of markets that we are not going to be able to understand probably 99% of the companies that trade. I don't understand probably 98%. I probably understand less than 100 businesses in India that are publicly listed, and it is perfectly fine. So in baseball, 3 strikes and you're out. And Warren always says that in the investing business there are no called strikes. And so I'd love to be a HDFC Bank investor. I'm not a HDFC Bank investor. I can't get myself to buy at present prices. Perfectly fine. There are 100 other ways to invest. One doesn't need to do it by looking at the past great compounders. And so that's perfect. So the investing business is a very forgiving business. We can do really well in the business even if we don't understand 98% of the markets and the companies in the market.
You get the 2% right.
It's very important to stay within circle of competence.
So what would you define as your circle of competence? I mean, again, we are doing this Buffett examples here because he's known for buying consumer monopolies. But if I look at your and whatever knowledge we have based on information in public domain, in the past you've bought auto companies. In the past you've bought companies which are commodity converters. You bought a seed company. You bought a real estate company. So how would you define your circle of competence, and what is the starting point which gets you say hello to a stock? How do you start analyzing a business?
Yeah, that's a really good question. So I think one of the things is that what happens in any of our minds in the first 30 seconds when we first encounter a company has a huge impact long term on our net worth. Because in the first 30 seconds, you have to make a decision. Do I spend 30 more seconds? And then do I spend another 5 minutes? And then do I spend another half an hour? So
and then 3 hours.
and you keep going, right? And so at what point do you say this is out, right? And so the in and out, because the thing is the data set is too large. If we were to spend a month on each business, we'd never get to probably 99.99% of the opportunities, if you will. So the way I look at the business, the investing business is to be a harsh grader. So harsh grader means we have no call strikes. It's perfectly fine to say no to a company that ends up being a 100-bagger later. That's perfectly fine. But it's more important not to have too many errors in your portfolio. So basically, when we look at these companies, I just have to ask myself, is this something I'm able to get my arms around, and is this something within my circle of competence? And if you take let's say the auto industry, I hated the auto industry. I still hate the auto industry. 30% of my portfolio is in the auto industry. I've had huge returns in the auto industry. I spent about 2.5 months studying the auto industry before we actually became significant investors and such. And but at the end of the 2.5-month period, I had certain insights that I felt were correct and that the market didn't understand them. So in that case, it took a while. In the case of Rain Industries, it took a very short period of time. So that's the nature of investing. Sometimes you can get to the finish line really fast, and sometimes it takes a while.